Imagine waking up tomorrow morning. You check your bank account and realize your car loan payment just got more expensive. The home you were planning to buy suddenly feels out of reach because mortgage rates have climbed again. And if you invest in the stock market, thousands of dollars could disappear from your portfolio in a single day. Now, here's the question. Can all of that happen because of one decision? The answer is yes. Right now, millions of Americans are focused on one thing. Will the Federal Reserve raise interest rates again? And if it does, the impact won't just be felt on Wall Street. It could affect every American household. Today, we're breaking down what the Fed is thinking, why inflation is still a concern, and what could happen to the U.S. economy in the months ahead. The Federal Reserve, often called the Fed, is the central bank of the United States. Think of it as the control center of the American economy. When inflation gets too high, the Fed raises interest rates. When the economy slows down, it lowers them. Why? Because interest rates influence how much people spend and how much businesses invest. When borrowing money becomes more expensive, consumers spend less, businesses invest less, and over time, inflation starts to cool down. But there's a catch. The same tool that fights inflation can also slow down economic growth. Over the past few years, Americans have experienced some of the highest inflation levels in decades. Groceries became more expensive, rent increased, gas prices surged, insurance costs climbed. Almost everything cost more than before. In response, the Fed aggressively raised interest rates. The goal was simple: bring inflation back under control. But many economic indicators suggest inflation hasn't completely disappeared. That's why investors, business owners, and everyday Americans are all asking the same question. Is the Fed really done fighting inflation? If the Fed raises rates again, the first impact will likely be felt in the lending market. Mortgage rates could rise. Auto loans could become more expensive. Credit card interest rates could move even higher. But the story doesn't end there. When consumers spend less money, businesses generate less revenue. When revenue slows, hiring can slow down too. And in some cases, layoffs can begin. In other words, a single Fed decision can influence the entire job market. That's exactly why every Fed meeting attracts so much attention. Now let's talk about Wall Street. Why are investors so obsessed with interest rates? Because higher rates mean companies have to pay more to borrow money. Growth becomes harder. Profits can come under pressure. And that's why markets often become volatile whenever the Fed signals a tougher stance. The Nasdaq, the S&P 500, the Dow Jones, all of them can react dramatically. Technology companies are especially sensitive. The AI boom has pushed many stocks to record highs. But if rates stay elevated for a long period of time, some analysts believe market growth could slow down. Here's where things get really interesting. Markets don't always move based on reality. Sometimes they move based on expectations. If investors believe the Fed is about to raise rates, markets may react before the decision is even announced. If investors expect rate cuts, stocks often start rising long before they happen. That's because expectations can be just as powerful as actual events. And that's why investors pay close attention to every speech, every interview, and every economic report. They're not just trying to understand what the Fed is doing today, they're trying to predict what the Fed might do tomorrow. So what happens next? There are three possible scenarios. First, inflation continues to cool. If that happens, the Fed may decide to keep rates steady. Second, inflation starts rising again. In that case, the Fed could take a more aggressive approach and consider additional rate hikes. Third, the economy weakens significantly. If growth slows too much, the Fed may eventually consider cutting rates. Right now, the entire financial world is watching U.S. economic data very closely because those numbers will help determine the Fed's next move. And here's the most important thing to remember. Many people think interest rates are just a technical topic for economists and bankers. But the truth is, interest rates affect your mortgage, your job, your investments, and your financial future. At
this moment, the United States is standing at a critical economic crossroads, and the Fed's next decision could shape the financial future of millions of Americans. So now the big question remains. Will the Federal Reserve raise interest rates again, or is relief finally on the way? Let us know what you think in the comments. What do you believe the Fed's next move will be? Trading Guide Check ask.